Good morning and welcome everybody to the Schwab YouTube coaching channel for the Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from our Denver studio. Very pleased today to be joined by my friend, fellow Schwabby, Mr. Mike Bruskoff. Mike, it's good to see you, man. How are things?
Good morning, man. How are you doing?
Terrific. Really glad to have you here.
Thank you for having me. Looking forward to talking about the markets today. A lot going on.
Good. Well, that's exactly what we're going to get to this morning, obviously, everybody. We've got plenty to cover as we review the charts of the market with all of you. We've got oil a little bit on the move, a brief pullback here, perhaps everything kind of remaining a little bit of the same stuff we've been seeing of late. We have not seen a whole lot of breaks or breakdowns or breakouts, but we're going to talk about a lot of those charts with all of you. We are joined this morning by fellow coach Connie Hill in the chat. Say hey to Connie, who can get to comments and questions that Mike and I are unable to get to, but we're going to nonetheless, as we always do, keep an eye on what's happening in the chat there to answer and respond to what's going on, and where we can, bring your questions to the table as we look at a bunch of charts. So with that in mind, please remember, you can follow us on X, and we would love it if you'd be subscribed to the YouTube coaching channel, everybody. We'll move to our disclosures briefly, and then we'll get to the chart. So please remember, everything we cover for you today is informational and educational only. We're not making recommendations nor any endorsement here for a specific approach to trading the market or trading your portfolios. What we are offering up, though, are concepts and strategies of technical analysis traders may choose to employ. The decision to do so is entirely yours, of course. We encourage you to take a process and a planning to your trades that kind of fits with your tolerance for risk, your comfort with it, etc. The extent to which you use technical analysis is entirely yours. Remember not to base decisions exclusively off what you get in the way of technical analysis. Now, what we offer you here, we take a top-down approach, everybody. What that means is we start broadly with our major indices. So we will look at the S&P 500 and the Russell 2000, the NASDAQ 100, semiconductors, and kind of expand out to ensure that we cover a lot of the macro conversation, which of late has kind of been driving the markets here as we watch interest rates and the U.S. dollar being a little bit instructive on our current broad market view. So with that, Mike, let's jump to where we always start this show. We love starting out with the S&P 500. Mike, we got a decent shot of suggesting we're at a zone, perhaps, of short-term support here.
Yeah, hey, Kevin. Yeah, so, as you look at that, I love the green line that you drew because I was looking at it earlier this morning. So we were looking at the same thing, right? Those highs, call it, I think it was like early June, give or take around June 2nd, those highs to the left-hand side of your chart. We had a great run over the last few weeks, and then maybe last week kind of lost a little bit of steam. But I think the area that we've landed on, coinciding with your 20-day moving average, but that previous, I'll call it that previous high on the S&P 500, as an analyst, as a technical analyst, I would hope that we could use that spot as some support. So while the market had a little bit of a volatility last week, hopefully today we can kind of use that as a support level to find an area of new footing for the market.
So kind of falling back, if you will, on the very common belief in uptrends, as we are seeing here, having made highs just last week or 2 weeks back, ultimately pullbacks to areas that were prior resistance can be new support and might be a spot where we see the sellers potentially lose steam a little bit.
That would be the hope. Yeah. Right. And we don't talk in the hope game, but yeah, as a theory of technical analysis, yeah, what was previous resistance, we would hope to be support on a new pullback after we broke out to those levels. So yes.
So we sitting on the 20-day as we speak. We've got a little bit of a red candle as the open here this morning. Beyond that, if we're going to be making decisions in the short run, everybody, the one area that I've been calling out is the gap low here, basically the low on our gap day, August 4. It's a very small zone in here where we gapped through the resistance spot, and I think that bears watching. You all know the importance of gaps. We speak about it frequently here, not to suggest that any one gap is more important than another, but rather the way that traders act when we see prices into those gap zones. Do bulls come in and support price at that level, or do bears overtake and send price below those gap levels and maybe down to a next layer for potential support? So we'll watch this horizontal spot here at 76.20 or so in the near run, and if we don't maintain that, when we could easily visit perhaps that 50-day moving average. We'd like to stay above that 50-day. Our bouts beneath it have been a little bit have been small, admittedly, but not uncommon when we go consolidation mode, as we did for a couple of months here prior to moving out of that range. So looks like, Mike, our weakness is coming from maybe tech this morning. We'll see a little bit about this, but we're into that interesting spot on both the NDX and semis. I think we'll see here momentarily as I clean this up a little bit, Mike. This is exactly what I was talking about. We're into that gap level from here, the August 4 gap. And that's going to be an important spot. It looks like we are in the process right now of battling it out as we are in that zone.
Yeah, Kevin, a couple of things that I might want to go back to the S&P 500, but stay on the NDX. Kind of zoom that chart out a little bit as you're talking about. In technical analysis, you call it a gap. They call it filling a window. It's the same sentence, right? It's the same sentence there. As you're talking about filling that window, if you look at the lows of the past 2 months before that, so you have a low in early June-ish, maybe a little to the left of where your pencil is right now, that one right there. And then you have another low almost a little to the right of it. So yes, we would be filling in that gap. I'm not going to argue with you if we were to go down there, but maybe I might raise that white line a little bit higher to the bottom of the left-hand side low, give or take probably, 2 inches higher than you are right now on that white line that you just drew.
Yeah.
That would be that spot you're kind of talking about. Yeah, that low right there, kind of move that horizontally to the right. That's where that's the area that you're talking about. It's a little bit above that. It's a little bit below that window that you're talking about. So I think, yes, could we fill that window? Yes, it's a small window. It's a small gap right there. Am I having a heart attack? No. I'd be more suspicious of the market, of the NDX, were we to break those lows from late July. That low is going to probably sit there a little bit more. And then even if we were to break it, Kevin, you got the 200-day right down there below. So while the NASDAQ has brought on a lot of volatility over the last couple of months, I'll say last couple of weeks in particular, it's been the fun part of the market. I don't know that I'm seeing a major spot for a fall off. We've already kind of worked off a lot of that overbought, right? The overbought that we hit from early April to June. Yeah. If you did a Fibonacci retracement, we've come to a nice little area inside there where, maybe we could find some support for the NDX.
Yeah, I like the as always, Mike, that I like layering those support zones beneath us so that we've got ways to be thoughtful about, hey, if I'm wrong and we don't get the rally that I'm looking for here, where would we possibly see a bounce? And you've got a few levels drawn in. We've got the zone of gap in here, and we can always add a Fibonacci move just to kind of validate some of those areas of support. So what are we doing right now? Off of this low move to the broken downtrend line. Remember, we had a downtrend line through here that we broke with this breakout move, the gap move higher. So we're below the 38% retracement, but right beneath it is that 50%. And Mike, while that's not exactly part of the Fibonacci sequencing, it is oddly frequently an area where sellers on new moves tend to lose steam. And so that might be a spot where bulls step in somewhere in that spot equal to that last line we drew in there, kind of where the 20-day moving average used to be. That could be a spot that holds up. And that's kind of what Fibonacci's do for us, right? They're not exactly predictive, just like anything in technical analysis, not really good at predicting what's coming, but rather maybe validating or providing confluence for us.
I think validation is kind of what you're saying there, right?
Yeah.
We always, Kevin, if me and you knew where every answer of the market was from a fundamental or a technical perspective, right? I say it jokingly, we don't, right? We
Yeah.
have, hey, here's the fundamental numbers that we want to hear. Well, here's the technical numbers that we want to hear. And that we hope that there's a confluence of events there that would give us support. And if our confluence was wrong, yeah, of course we could be wrong. Then we make a change into our strategy of the way things happen. And that's where you see those bigger moves happen in the market, where everybody kind of thinks, hey, that should be a support zone. Then unfortunately it ends up not being. And then you see that exaggerated, I'm just making it up, 1,000-point down day, 800-point down day in the market, something like that.
Yeah, that does exist, no doubt about it, of course, Mike. So, all right. So there's a look. We obviously have a little bit of weakness tied to tech this morning. We'll evaluate that a little further as we move on through the major indices here. Let's look at our small caps this morning, off 0.5%. You know, we continue to be defying what maybe expectations should be, given where we've seen rates move, Mike. The Russell continues to groove higher. The 20-day moving average, not terribly consistent, as you can see, but the 50-day has been really consistent for us dating back to early April here. Is there a better trend line maybe to watch for the Russell than the 50-day, Mike, though?
I mean, as we've always talked about, Kevin, there's definitely, you know, hey, we could say, hey, I want to follow the 20-day, I want to follow the 35-day. You know, we follow the 50 because that's where, you know, those are the popular numbers, right? The 20-day or 21-day, the 50-day, the 200, right?
Yep.
So I'm a firm believer of keeping my numbers that I always follow. So I follow the 50-day. That is one of the ones that I follow. It's acting as support, right? We did break it a week and a half, earlier in August, we broke it barely.
Yep.
And then we kind of kept on. If you drew a steep uptrend on the Russell, you could get those lower lows down there. I was even going from the low all the way at the bottom, but you've drawn a nice support.
That's really steep.
I said it was steep, right? But you've got 3 points now. When you draw a trend line, you need at least 2 points on there. And
Yep.
now I say that sarcastically, but that is a support spot. Right?
Yeah.
Now, the problem would be, hey, if we break it, Kevin, right? We break where you just drew. Well, where is it going? Probably, if you look, 2,900 seems to be a nice stop right there, which was a low. Right? You got that low right there. So that would be a spot, but you don't like being below the 50-day. Maybe we would add in a 20, and maybe our 20 would find a little trend line there. But right now, listen, the Russell's been grinding its way up, I'll say, from late spring, all summer. It's been grinding its way up. Hasn't really made, lack of a better term, a parabolic move. So I kind of like the trend that it's in. Could it give a little back? It certainly could. Could it consolidate into a sideways zone? Somewhere in that 2,800 to 2,900 range, it certainly could. But I'll take this as, I don't want to say a bright spot of the market, but it looks okay. It looks okay.
Well, it's been a better performer, Mike. We can at least say that much. I mean, on a year-to-date basis, it's up 21% nearly as we pull back to support, whereas the NASDAQ is only up 14.6 and the S&P is up 11.6. So clearly we've seen outperformance from the Russell, but we just haven't seen it in a way that can be easily understood. Again, I continue to see these higher yields, and higher yields should be something that pushes or tamps down the small caps commonly, but that's not really been the case. Both the yields are trading at a 52-week high, and the Russell is slightly off the 52-week high. So one of these is going to prove to be right in the nearer term, Mike. We just don't yet have a clear idea as to which one.
Yeah, and I think Kevin Warsh he's in a difficult spot, right?
Sure.
His boss is pretty much asking for lower interest rates.
Yep.
And he might not be getting the cards dealt. I'll say, Kevin Warsh, he might not be getting the cards dealt in the favor to lower interest rates. So the
Yeah.
market's got a little bit of, they know he has a mandate to lower interest rates. The market's not giving him that because it's not necessarily air parenthesis, maybe necessarily warranted by the economic data. Right. So when we look at that economic data, do we see a market? And that's why you're seeing this, the 10-year surge into high, what's it, 5-year highs, Kevin? That we're hitting on?
We're not quite, but we're getting there. I mean, if we looked at this, there's the 5-year high back in October of 23. So, we're elevated. But if you looked at this on a long-term chart like we are right now, Mike, this looks fairly bullish from a trend standpoint if you're looking at just on technicals, right?
It looks like it might be trying to break out. For all we know, those 3 matching highs could be resistance and we could fall right down from there.
Truth.
Right?
Entirely true.
We don't have a move yet. We don't have a move. Now we have some big economic news coming this week. We've got PCE later on. We've got GDP later this week. Those are the things, PCE in particular,
yes,
that the Fed kind of puts a little bit more extra weighting on. Mm-hmm. So this will be an interesting week economically from the PCE report that we get to kind of see where interest rates may move in the next couple of months.
Yeah, and that's not it. Obviously, we're going to be at the symposium this week as well with the Fed Reserve in Jackson Hole. So there will be potentially some clarity on rate expectations, albeit the Chairman Warsh has been kind of non-committal on foreshadowing and not all that interested in giving too much information about expectations. So we'll see to what extent they wish to share with us. But I am sure the markets will be parsing his words very closely, as it often does. Okay, so there's a look at rates, a look at the big 3 indices. Let's look at our semis. They're showing the greatest amount of weakness here. Breaking down, Mike, this is a bit of a heads up. It might very well be. That level of support is one I was speaking about last week, Mike, that gap level, right? So we are now below the high of our gap. This looks like a breakdown at this moment. Mike, bulls are going to need to step in very, very quickly for any bounce to be opportunistic here. This looks like a rejection at the 50-day moving average last week, and that kind of stands out because we made essentially matching highs here as opposed to higher highs. So matching highs that did not lead to higher highs, that looks like a rejection at the 50-day moving average, Mike.
Kevin, I think I kind of tend to agree with what you're saying right there, right? I as much as I want to sometimes disagree with you, listen, I think we've had a tremendous run in the semis all year. Even with the recent weakness, probably still one of the leading categories for the market this year, right?
Yeah.
So, all right, it's a clear rejection at the 50-day, right? You can see that. You have it highlighted. Now, I think your low in that chart, what's that? Call that 10,000 right around there. Yeah, right
about
there.
10.5.
Or 10.5. I think that's going to be a spot that we might need to hold. Right now, we have NVIDIA this week. We have earnings this week in NVIDIA, big player in that group, right? So we do have some part of that. We'll have to see what kind of earnings they have. Could they save it? Who knows? I don't know. But when I say save it, could they save the trend? Could they push that trend above that 50-day moving average? I do think that could happen, though. So a good number from them, and that could kind of turn around the whole sector. The sector's working off an overbought, right? Overbought. Could this be short term? If me and you are looking at the next 20 years, then it's overbought in the next 20 years for that short term moment. But even for right now, listen, a tremendous move. I mean, you're looking at a chart that moved from, early April from 5,000 all the way up to 14,000. Me and you are now hanging at 11, and we're questioning it.
I know,
right?
Yeah.
Right? So it's a good move. I'll take it. Probably a little weakness, a little volatility. I think that's what we're used to with the stock market. my major concern would be breaking your low right there at about 10.5. My next spot would be a worrisome spot. I'm looking at 96.38 on your chart over there.
200 day.
And that didn't mean you can have a more serious conversation. Then we'd
Yep.
be looking like we're making a head and shoulders pattern. You've got one shoulder highlighted there. There's a shoulder to the left in May, right there. And then we've got that head up top, right?
Yep.
So if we were to break that neckline, then I'd be a little more concerned. But the neckline being the white line that you have drawn there, the dashed line there at the bottom, that's where I would be concerned for these.
Sure. And I love that you're not speculating one way or the other. I don't know that this is what could happen, right? But we are always being thoughtful about the developing pattern, because if we think about it in advance, then the likelihood is that we're not surprised if and when it does come to fruition. We actually have steps to take. We know what we might do if that were to occur. In many cases, a close under the white line that we've drawn in for horizontal support, the so-called neckline of a potential head and shoulder top like that, Mike, that becomes an area where traders would take action, reducing position size on the long side, maybe adding protective positioning if they don't wish to sell. Those are things that can be done, but you got to think about that beforehand so you're prepared. As always, Mike, let's see if that line matches up. I mean, you're absolutely, the way you explained it was exactly what I was seeing as well. This would be an important area. This could be maybe a 50% give back of that. By the way, that was a 105% rally trough to peak over about 60 sessions. So about 12 weeks, right? About 4 months or so, or 3 months or so. But let's see if I drew a Fibonacci sequence from that trough to this peak and that Fibonacci level at the 50%. So it would be kind of something like this, right, Mike? I mean, this could all be supportive, this zone right here. And interestingly enough, if and when we got down into that zone, Mike, wouldn't the 200-day moving average be catching up into that zone too? So it all kind of stands to reason that this area could provide support for us.
Which is, I hate the word hope, which is what you would kind of speculate, right? I would think that that would be a zone of support. We're not there yet, right? We only have we're above that. We're concerned if it comes down because it needs a home. It's just not going to hang out right there at 10.8, 11,291 where it's sticking down. There's no, what's the reason why it would stick there, right? Yeah. Maybe a little higher. Maybe at that 11.8, it maybe would be a different number because that's where that previous resistance zone was on the left-hand side of that chart. So yes. I would look at that right now. It might rain. It's getting cloudy outside, Kevin. It might be sunny this afternoon. And I don't know which way it's going to move, but I do see that it needs to find a home. It's either the home is going to be above and it's going to crowd in at resistance up there, or it probably might come down to that support level at around, call it 10,000, give or take.
Well, it looks like in order for the semis to hold up here, we're going to need some semblance of maybe a headline of some sort. We'll see. I did see a headline this morning suggesting that we were going to actually, this might actually be official. I don't have confirmation on it, but we may be hearing from the Treasury Secretary today, Scott Bessent today as well. Some comments out of him could easily have some impact on the market, so that bears watching as always. All right, Mike, let's talk about oil. Oil's off a little bit today. It's pulling back. Still haven't seen a break of the downtrend line we've been talking about. So I'm going to bring in the future symbol here. We use the /CL for crude. We're not advocating for futures trading. Remember, you can trade futures here at Schwab. You do need to be approved to do so before doing so. So make sure you go through the steps necessary to get approved to trade futures. What we're going to look at here is just the price of an oil barrel, off about 2% today. And more important than that, perhaps, Mike, is the fact that we're looking at yet again another rejection at the downtrend line that I've drawn in. Now, granted, that does not necessarily mean that I've drawn that line perfectly, Mike. It just means that there's a clear trajectory here, right? We've been as high as about 117, 118, 119 a barrel, but we've been unwinding this trade for the better part of the last 4 months.
Yeah. Listen, a tough one, right? When we've been unwinding this trade for the better part of a few months, right? I say that sarcastically because was the trade for it to go to 110, right? If you
Yes.
go back, like we had been really kind of consolidated way before that. Excuse me. Obviously, we know why oil spiked. We all understand that right now. But if I'm looking at this, we're making, and we're all probably almost three-quarters of the way, we're making a little bit of what they call an ascending triangle, right?
Okay.
We've got those lower highs on the right, at the top of the chart, and then we have you've drawn in a base. I don't know how strong our base is. I see the resistance level, right? I'll say pre-war with Iran,
Yep.
pre-skirmish, and then you can see where we're kind of making those lower lows. I think, if I were the president, I'd love to see this ascending triangle because it seems like if we could break that lower line at 65, that's everything that he wants, right? That
Yep.
would mean the war's over and we went back to air parenthesis, whatever was normal before that. But we are making lower highs. So as I look at a trend, that where we spiked up to after last week, and if you look at it from an oil perspective, short term, that last week was a good week, right? Look at all the green days that we had there.
Yeah.
But we didn't have enough momentum to break that downward trend line, right? So we didn't
Yep.
have that momentum. So right now, and if I'm looking at your volume, it's just been average, nothing crazy, right? Nothing like we saw early May with those spikes in volume. So I think we're going to probably meander, and I think obviously this is a bigger picture than something technical. It's fundamentally driven. Fundamentally driven
Sure.
would be we reach a resolution on the war with Iran, right?
Yeah.
That's what's going to happen right now. A chart can have a big move based upon the fundamental news that we see. So I think this is more of a fundamental thing than a technical thing right now.
Yeah, maybe so. Fundamental and headlines, obviously.
Yeah,
Um,
headlines.
I gotta mention it. We do have a good friend here in the chat, Mr. Mark Idem, popping in here, throwing some smoke your way. By the way, letting everybody know that he's been around quite a while. Did the same job as you, Mark, formerly a Schwabi, and reminds us some good things. Not the least of which is that he knew you when you had hair, which I think is hilarious. But the other is, as Mark reminds us all, that there are some very negative four-letter words out there associated with investing and trading. One of those is hope. Another one is can't. It can't do this. And we all know better than that, Mike. This can't happen is certainly a recipe for you better believe it will happen. Those kind of things are kind of consistent. So we try to. This is really why, as Mark is pointing out, why we talk about planning and thinking about the worst case situations, not because we want to be pessimistic, but rather we want to be prepared for moves as they occur. It's super important that we're prepared to take action when we need to take action. By not thinking that something can happen or thinking this couldn't possibly occur, well, then it really leaves you at a disadvantage if and when it does happen, right, Mike?
100%, Kevin.
Yeah.
And listen, Mark hosted, an earlier version of this show with you and I for a long time.
That's right.
What I would say is I caught myself saying the same thing. Nobody should be in the hope game. I
That's
said
right.
it like 2 times today. I did say the word hope, and I bit my tongue because nobody wants to be in the hope game. You need to
Yep.
have a structured plan and a risk management strategy in place. If you were long oil, should it break down below that 65 support, right? If you wanted to get long oil, I'd probably wait till we could get a little bit of a breakout above that downward trend line, right? That's all. It
Yeah.
just gives you some guidelines to get
That's
out of
all.
the hope game. That's
That's
all
all we're
need.
saying. Yeah.
Yep.
Yeah. Hope is not a strategy. Have a strategy. Know what you want to do when certain things occur. That should make it a little easier on us. So certainly from a decision-making standpoint. Mike, as we think about the macro side of things with oil's move, one of the bigger developments in the last week was a significant move lower in the US dollar, which was actually a little bit supportive, of course, of broader indices. It's why I think things held up last week to a certain extent, with the dollar pulling back on the idea of adding some liquidity to the U.S. Treasury buyback program, doubling it actually, $2 billion up to $4 billion. and the dollar slipped, and that kind of led to some interesting moves. So dollar lower, and what we noticed again was a big support move in the way of gold, and gold has really moved to the upside as a result here, Mike. Again, we're looking at the future symbols once more, but just from a price understanding, Mike, gold, are we looking at maybe the return of the rally that we witnessed? Maybe not the extent that we saw previously, right? Not in the last 18 months or so, but maybe an improving chart here for the gold side of things.
Yeah, Kevin, certainly an improving chart on the gold, right?
Yeah.
So exactly what we were just saying 2 seconds ago, can it break that downward trend resistance line, right? What we were just looking at 2 seconds ago, we were running into that line and we had 4 spots where we hadn't broken through. And I said, I'd be more optimistic of a breakout if we could get above there. So for gold, it did 2 things. It broke the downward trending line, and it's now above the 200-day moving average.
Yep.
So that doesn't always happen so quickly, Kevin. That does not happen so quickly, where it runs into a little bit of resistance, like a perfect chart last week, ran into resistance and amazingly broke through. Now,
Yep.
the volume was a little bit lighter, right? A little bit lighter. You see some declining volume especially on Friday, a little bit lower, nothing crazy. I'll take it. But what I'm seeing as a risk-on trade when you see gold rallying, right? The other commodities aren't necessarily following. As we were just talking about oil, I looked at palladium, I looked at platinum, I looked at silver this morning, and I don't see the same trends in them that I'm seeing in gold. So I think maybe a little bit of the move in the dollar is air parenthesis, maybe a little more correlated to gold right now.
Yeah.
But I'm not seeing that in the other commodities out there. But if you're a gold bug, I'll take a breakout. I'll take a breakout, right?
Yeah, absolutely. I mean, again, we're talking about it from the trend standpoint, and we see a new short-term bullish trend. We can speak to the higher highs and higher lows in the short term since breaking that downtrend line. The rising 20 period moving average through the 50 period, it's going to continue up in the near run here as gold continues to exceed the 20 period moving average. So each new day is going to be a higher price. So you can expect the 20-day to continue to climb. Notice also down below the RSI an overbought condition, validating the recent move to the upside. Let's talk about that move in silver. It's been a little different, Mike, as you said. I think we may be at a broken downtrend now. We do have the 20 above the 50, but if this is going to move like gold, well, then this looks like it has to play catch up comparatively.
I think it's funny. I'm looking at the comments and I see Gary. Thank you, Gary. He said silver's not doing so bad. That's what he said. And I said, what I was saying in comparison to looking at gold, I didn't see the same strength. And when I say specifically the same strength, look at your blue line, the 200-day. I do see what you drew. We broke the downward trend. That's part one. Yep. I like that, right? We got, instead of making higher lows, we're starting to get a little bit of a short-term, pop up. But that 200-day is flattening, Kevin. Your blue line is kind of starting to turn to the right. It's going to have a little bit of a harder time pushing through there. Okay? So that's where I was saying comparatively that gold has pushed above the 200 and silver, platinum have not at this point. Doesn't mean that they can't. Gold can be the leader and everybody can follow it. But for me, if I was, from a trade perspective, I'd like to see a breakout. I'd have a harder time buying silver here right now because I see that resistance. I see your confluence. Doesn't mean it's not a good trade. It's just a risk reward. How much can I get on a reward to get above that 200-day moving average versus risk if it falls back down to the 20-day moving average? Right.
Precisely.
Right. That's all I'm looking at right there.
Mike, that would actually be, if we round it up here, 69 back to maybe 62. What if it found the 50-day? That'd be 69 to 62. That's a 7-point move. That's better than 10%. So that, you're right, that is risk to the downside, right? Doesn't mean it can't move higher. It just means it has to take out a level above you that is very close. And granted, if it does, then you might be able to flip your risk reward. But exactly why, Mike, as you're saying, traders should be, maybe often will wait for that break to occur and then position so that they can manage their risk more effectively by allowing maybe a pullback first, then entrance. That gives them better risk versus reward. But as always, you can make any trade work if you're proper if you set yourself up properly. So now, interestingly, Mike, in addition to the moves in gold and silver, we've seen a very big move in the last week here on Bitcoin. Now, we're going to mention Bitcoin once more using the future symbol, but you should all know cryptocurrency, of course, this is not necessarily appropriate for any or all investors at any point in their experiences. Make sure that you're familiar with this if you're going to be trading it. We're going to talk about it from a technical aspect exclusively. And Mike, the move we've made, 4 days in a row, big, beautiful green candles, but you know what? It's a little dubious at this point now, right? Again, risk versus reward. A fantastic move higher, 20% in the last week, and yet we're also at a spot that could be resistance here or very close to it, right?
Yeah, I think it's a lot of the stuff that we've been talking about. Like look, you're drawing it. Thank you. Right. So we're
Yeah.
running into a little bit of a previous resistance zone. Right. You just
Yep.
highlighted there. If you look at May on the bottom of Kevin's chart, you kind of see that resistance zone that we kind of ran into. Now, I'll take a couple of things. When you look at Bitcoin, it's been, I don't have to say it's been volatile. That's an understatement. But prior to last week, it had really consolidated. And if
Yeah.
you kind of look at the level from February to April, air parentheses, been kind of a boring year for this, right? Bitcoin hadn't really been moving. It was pretty much stuck in the low 60s to low 70s,
Yeah.
right? Of thousands, 60,000 to 7,000. And now it had a nice move last week. What was it, 23% move last week? I think it was
Yeah.
a 23% move last week. So I like that it got above the 200, not fully above it, but it's there. Could it have some room to run? Well, now you're running into where it gapped down on early February. You see that gap down. So we're filling the gap now on an upside, right? Doesn't have
Yep.
to do that. It does not have to do that. And we've got that resistance from May. So combined with your weakness in the dollar, right? We're seeing a little bit of weakness in the dollar. Maybe that gave a little bit of a benefit to Bitcoin last week. I think you had mentioned that to me earlier this morning.
Yeah.
Your RSI, as you were pointing out before, we're in overbought zone. We haven't been in overbought zone all year. And we've seen those parabolic moves, not necessarily in Bitcoin, but in the semis this year. We were just talking about them a little earlier, where things can parabolically keep just going a
Yeah.
little even beyond my imagination of how things of the word parabolic keeps working, right? I just, the semis, they just kept going and going this year. I'm not saying Bitcoin is doing that by any stretch, but it could.
Yeah.
And clearing that 200-day, literally first time all year, Kevin. Look at that. I'm noticing that right now.
Well,
First time all
certainly.
year, it's been above the 200.
Yeah, it's not uncommon to fail the first chance we get to the 200, after having
Mm-hmm.
broken it to the downside. And this is really the first chance since November of last year. So you're looking at a good 10 months beneath it. I do find today's intraday low to be kind of interesting. The fact that it was on the 200 day and then we saw bulls come in. I think a lot of traders are going to hope or plan to see a break above the high we made Friday. And then you could have a momentum move into the prior highs back here that could then act as resistance. So that's about 3,000 points away, $3,000 away there relative to the Bitcoin price. But big move into the RSI, as you called out. I think the other aspect of this that's notable to me is if we back this chart off to a weekly and just looked at only the 200 week moving average on Bitcoin over the last I think that's a 5-year chart there, not 3 as my detail would indicate. So let me fix that for you all, everybody. Make sure I'm valid here. But yeah, 200 week moving average. And boy, we went nowhere once we got there, Mike. It just sat on that moving average. Does that mean it has to hold? No, but it does mean that moves beneath it would be very instructive. And now you're starting to wonder, maybe this is the low of the retreat in Bitcoin potentially.
Yeah, I mean, if you look now that we're looking at a weekly chart, extend your support line to the left, right? And it looks like we're going to get right through that early. Yeah, look at that. See, I was
Nice.
almost going to go with your support. Draw the line down below where we were sitting on the 200. Draw a support line there. Sorry, Kevin.
That's all right. I don't mind. There you go.
Right. So when you said, hey, I know it's all speculation. Hey, could be the lows. Now we never say that because none of us never know what the lows are. But could it be a nice support zone for Bitcoin that's been pretty volatile? Yeah. And could we be maybe breaking out of that downward support, out of that downward support area, breaking out to a positive side? I would say, yeah, as well. We could be doing that. Again, I don't necessarily trade Bitcoin myself all day long, but when you see something make a 23% move in 1 week, it does catch your attention. Obviously,
Sure.
Bitcoin, they talk about it all day long. So it does open up, hey, we're here to make money, Kevin. And if there's a trade in it that we can make some money, again, there's always opportunities. I'm not suggesting
Yeah,
anybody go out there and buy Bitcoin, but
of course not.
if you're looking for a technical pattern in the market, these are things that we look at. Yeah, it's a nice volume last week. Now you might get a little more consolidation down here. Maybe it even breaks back into that zone. Who knows? But at least it's call it a green shoot, stupid terminology. You got a nice green candle the other day that broke that downward trend line.
Yep.
That's what I would say.
Yeah, and if nothing else, you could say that by moving off of that 200-week moving average and looking at the lack of energy at the 200-week, as it really literally just went sideways at that level, Mike, it validates that zone as support, if nothing else. And so traders with a comfort zone to give up somewhere in the neighborhood, Mike, of say, 20,000 per Bitcoin here, Mike, and believing that it could go back to the highs, well, that's good risk versus reward. Nobody wants to give up anything to the downside, but if you think it's going to hold 58,000 based on the support level we've seen, and it could go back to the highs it had, well, the upside opportunity is about 2 to 1 your downside opportunity if you think that that's what could occur. And that's that's what we're talking about with regard to risk versus reward. Mike, we're in our final minutes here. I wanted to get to one upgrade in the chat, or rather in the news this morning, and it was on a home builder. So I thought we could look at the home building space, which is really not going anywhere here, Mike. I noticed that what the home builders are kind of in consolidation, but it's not really a trending group on the daily chart. I wanted to look at it on a weekly before I mention the upgrade, but Mike, does the weekly chart maybe offer more insight than the daily does on this home builder index?
I mean, if you're looking at a weekly chart right there, Kevin, we've had a series of lower highs, but the truth right now, on most of the individual home builder names, we've really consolidated to literally a sideways trend.
Sure.
So I think how many years? You got 5 years on a weekly chart there. We've consolidated on the daily chart on some of those home builders pretty much as a sideways move. And I think, I'll say for me and you, Kevin, I'll say for myself, I think it's tied to interest rates, right? The housing market is struggling right now.
Yes.
And what it needs is lower interest rates. It needs lower interest rates because I'll say guys like myself who bought a house back in, the earlier 2000s, I'm locked in at a low rate, right? I'm locked in below 3. So why would I go and take my mortgage, go and buy a new house, either downsize or upsize, whatever the hell I was going to do, Kevin, and then take on a higher interest rate? That doesn't make any sense for our entire show. It doesn't make any sense, right? Let me pay more money to borrow money. So again, I understand why the president wants, interest rates to go down, but we need economic forces to help that, right? So
we
I
sure
think
do.
home builders are driven by interest rates. I think that goes without saying.
Yeah, and yet, the point needs to be stated, right? We want to say it out loud. The upgrade came on Pulte Homes at Wolf Research, upgraded to outperform from peer perform. They put a target on this, a $28 premium to where we are, $27 today, 158. Of course, no target is a guarantee to be achieved, but the firm, Wolf Research, believes Pulte is well positioned to outperform peers in a challenging demand environment as the company's balanced consumer segmentation continues supporting their fundamental resilience. Now, a healing Florida market will disproportionately benefit Pulte Homes, but the technical analysis, according to Wolf, suggests they're using the term attractive entrant. That's just based on price, I'm sure, because the trend is not really a trend that you can find here, Mike. It's difficult to define a trend here in the intermediate time frame, but and further, I didn't know that Florida was healing. Everything I'd seen suggested that Florida's housing market was as rough as anywhere. So it's been a difficult housing group. There's no doubt about it, Mike. Difficult process across the board for quite a few months now, and we would love to see some healing going on in this space. Mike, anything you'd like to leave our viewers with as we wrap the show today?
What I would say, even at this time on the East Coast, I was showing you, or, I was talking to you earlier, Kevin, you see exaggerated moves right now, right? If you see exaggerated moves, this is on the East Coast, and then, it's not an East Coast market. I get that. But a lot of the money centers are here as far as, hedge fund managers, mutual fund managers, etc. It's a slow time of season, right? So
Yep.
it's the end of the summer right here. If you see an exaggerated move, look under the covers, take a look at the volume that you're seeing. And if the volume is there, then maybe that move is a little more warranted. But if you start to see a big move on low volume, just attribute it to a seasonal activity and maybe kind of look more for the long-term trend in some of those stocks. That would be
That's
my
a
2 cents right now.
Insightful, very helpful, Mike. Thank you so much. And thanks to all of you for joining and participating in the show. We always appreciate you being here each day with us. Thanks to Connie Hill in the chat. Great to see so many familiar names in the chat, former Schwabies, and all of you who attend so frequently. We appreciate you. Follow us on X, subscribe to the channel, and be sure to have a fantastic rest of your Monday, everybody. We look forward to seeing you all again real soon.